Hey there, YouTube. My name is Joe, and you're here with Big Brother Joe, and here we talk about health and wealth. Today's conversation is about wealth. We'll talk about assets in this video. I'll have another video for liabilities, which is the counterpoint to this, linked below. But today, we're going to talk about assets. Now, we love assets. Your parents may not have ever told you about this. You maybe never learned about this in school. So this is maybe a chance for you to learn a few things, to maybe just open up your head a little bit to what's out there, and then you can dig further in. So assets, they're going to be things that pay you money, to make you money. So you're going to add money, right? Your net worth will grow, dollar per hour will grow, and many things like that. Let's start here. I'm going to start with some of the more basic stuff, and then I'll get into some other ones down the line. First, we have our job. Now, this is what everyone does, right? Everyone has a job. They show up for $1 per hour or a salary. Now, that is an advantage to this, is it's generally more stable, and it's something they're actively doing and it's predictable. Those are some advantages to it. Disadvantages is if you're not there, you're not earning that income unless you have some paid time off or something like that. It has its time and its place, but what I would recommend is you use this guy to build the rest of them. Okay. To diversify your portfolio into many of these might be an advantageous way to get yourself towards wealth and make more of that guy. Okay. So, bonds, let's start with those. Bonds are going to be a loan that you give. This is either to the government or to a business corporation or something like that. They're going to pay you interest to you, okay? A certain percentage. It's not going to be very large, but it's way better than it sitting in a savings account getting you 0.01% on your money. If you know you're going to be sitting on a decent amount of money, you can put it into short-term bonds or longer-term bonds, and you can check those out and look with your financial advisor. Next, we have stocks. Now, stocks are going to be a share that you have in a company. So it could be something like Apple. It could be something like Facebook or Microsoft or Coca-Cola. The great thing about stocks is you own a certain percentage of that company. And this will either go up or down based on the market. The hope is that you go up with them over time. Some of them also pay you dividends, which is kind of like a small amount of interest that you would get either every month or every quarter. Some other ways you can diversify your portfolio with some stocks is getting a group of them. Okay, this would be something like an index fund or a mutual fund or something like that. It will spread your risk out over many, so you could have 100 different companies part of an index fund, such as like the S&P 500, which you might have heard of. A quick Google search will get you there. And that's going to be the top 500 companies in the stock market. Next, this is probably my favorite. Okay, this is going to be your real estate investments. Okay, this is the one that I pursued the most in over the past 2 years. I'm going to give a quick shout out to Bigger Pockets. If you go to biggerpockets.com, they have some amazing information, forums, podcasts, and stuff like that that can really help your financial knowledge in the real estate market. There's four main reasons you want to get into real estate, in my opinion. Now, I have a couple of rentals with my brother. First, you have cash flow, which is money that comes in each month. Okay, you have tax incentives, which is writing off depreciation and other things like that. You also have appreciation, which is going to be a gain in the amount of the property's value, similar to a stock going up. The housing market will go up. And last but not least, you have some forced appreciation, which can be done through adding value to a property, and then you get more on the back end. A quick example is, let's say you're going to get a duplex, and which is a multifamily home that has 2 different renters living in it. If you fix up both of the bathrooms, and let's say that costs you a total of $10,000 and it adds $20,000 in value, you just force an additional $10,000 in appreciation, which is money when you sell. Okay. Moving on. Next, we have the side hustle or other businesses. Okay, multiple streams of income. This is a very popular topic right now. Essentially, you're just going to create an additional source of revenue. The great thing about this is it can be done on your own time, which is why it's a side hustle, not a main job. If you do well enough with your side hustle and you are passionate enough about it, you can turn that into your main job, or start your own business. The thing that I would push for here is trying to find some way that you can have passive income. Okay, that's another great thing about the real estate investment. A lot of it is passive. Money while you sleep. There's nothing better. The last one down here that a lot of people miss when they're talking about assets, they're going to be employees. Now, if you have your own business, let's use an example. If I'm worth, we'll just say $25 an hour, okay, and there's a task that I could hire someone out for much less, let's say $10 an hour, I can use my time on better functioning items that will make my business more money. Okay, so if it's something like stuffing mail or taking down information or creating something such as like graphic design or editing a video or something like that, all that can be done by somebody with a lower skill set or who's willing to work just for less money. While you can take your time, which is one of the most valuable things, and apply that in a more focused direction. Okay. Now down here, I have a question mark box that you've probably seen. This one, I'm going to put your personal residence or a home in here. Okay, let's put home for short. Now, your home could be a liability, which I'll talk to you, and again, it's cued below. It could be a liability because if the house, let's say you've got a tree that falls, no, that's not a good example. Let's say the roof needs to be done. And that's going to be thousands of dollars out of your pocket. That's going to cost you money. That is not an asset at that time. Now, how you can make your home an asset is going to be with what I was kind of talking about, the real estate investment, is do some forced appreciation, some value adding to your home. If you wait at least 2 years before selling your personal residence, you can avoid capital gains. This is going to be fixing up your home in some way. Some of the more popular ones are going to be new paint and new flooring or new carpet throughout the home. Another thing you can do is update the kitchen. Another thing you can do is update the bathrooms. Those are some of the most popular for quick ways that you can increase the value of your home. So let's say if you boosted a $30,000 value, after 2 years, if you sell, so let's say your $100,000 home went to a $130,000 home, you wouldn't have to pay taxes on that extra $30,000. You can then take that and roll that into your next property that you choose. I think that's about it for you guys today. Please like, comment, and subscribe. And let me know what you're liking and what you're not liking about the video so far. All right. Have a great day, everybody, and I hope that was helpful.